All right, what's up, y'all? Welcome back to Maverick's Point of View. This is your boy Maverick, and I'm back at y'all with another video. So, actually, I haven't continued a free mini course in a minute, and I wanted to make this quick video. I feel like something important that we need to go over. Well, the last video we went over was time frames, right? The best time frames to execute on or to mark up your charts with, which we know is going to be the daily and up, monthly, weekly for sure. Give you a nice sweet spot and show you what's really going on a long term basis. And we're going to now go over executions, right? So when you do your markups, how you should enter based off of those markups, right? And remember, if you didn't know, these are just my alerts, so please ignore them. Just look past them because I don't want to delete them. But I wanted to show you guys. I wanted to show you guys executions. I haven't made a new video for this free mini course in a minute. So I was like, you know what? Let me knock it out real quick because I don't be getting a lot of time. Okay, I'm gonna start here and I'm gonna stay here. Why? Because as I told y'all before, if y'all been watching my regular videos, and if not, this from this box right here. So, picture all this is gone. This whole half just doesn't exist right now, right? We're gonna go back in the past. When we got here, this was a big failure. Remember, I told y'all when y'all see big wicks, that usually means the market is gonna go in the opposite direction. Especially if we're on the weekly time frame, because that's a lot of data. It takes a lot of candles to do that, right? And that's the real setup. That's the real play. That's what the banks are doing to trick other people, but also warn people that do know, like myself, of what's really going on. So when we start to see these big wicks, we know that the market's going to do something different. It's going to go in another direction, at least for a certain period of time. I mean, look at this one, right? This big wick here, the market reversed hard. It still came back down, but at that point, it really, really changed direction. Same with here. Boom, it changed direction. It went hard down, changed direction, but then it ended up going back upwards. Then we finally got down. So the market likes to play around, but it also gives you signals. And so when you see these wicks, remember, these wicks are a signal for you to look at the market changing its direction. Now, going to the daily time frame. Now we're messing with this box because, like I said, this coming from here. So leaving this zone. Hold on 1 second. Leaving this area, the market went up 120,000 points. Coming to this area from this previous level, all right, the market went up like 200 something thousand points. So what we're doing is we're paying attention to significant areas of movement. I've talked about this in the previous videos. Every time you have a significant area of movement, that's where you want to look to make a trade decision because that's where the real moves are coming from or going to. Simple. So now we see that the market moved really, really hard down for the last few weeks. It's been pretty solid downtrend, right? Now we're at this spot right here where the market previously did an uptrend. It paused its uptrend, got some significant downward movement. This is about, let's say, boom, 25,000. Well, let's go all the way. Let's go to the wick, right? So this is about 36,000, right? So it dropped 36,000, but then after it failed to go any lower here, it went up, boom, 156,000. So point being is there was a lot of buyer momentum here. It started from here. This is where the buyer momentum started from. So this is where we're going to look at to see if the buyer momentum is going to kick back in and do this, get us to go back up here, right? And start pushing new highs. Or if it's going to do this, finally get below it, and then where else is it going to go besides here? And why? Because that was the last level. This area was the last territory before it jumped up really high and made a lot of movement, made a lot of significant movement. I'll make this a whole zone just to make it simple for you guys. But we're always going back to levels, as I've talked about, or zones that we previously come from. We're always going back to previous territory. Remember, I've been explaining it very simple like that. If we're fighting for territory, we're always going back to a previous territory or looking for new territories and then going back and forth between those. So as you guys seen, this is a lot of back and forth action. There's no real determination back and forth over here, right? And then finally we got past this territory. Buyers finally got past this level, past this territory where they tried to go before. They finally got past it. And what did the market do from there? It shot up. 80, almost 80,000 points, and it was straight smooth. That's a beautiful time to trade in the market, bro. I remember trading this. When you get in here like this, bro, and you're just sitting in there, and you don't have to you don't have to do nothing for. And these are weeks, right? So 1, 2, 3, 4, 5, 6 weeks. For 6 weeks, it just went up straight 80,000 pips points. That's a significant time in the market. Is also a significant move in entry, and that's how you really want to trade. People that are trading like that, the banks are trading like that, and they're making big money. So, keeping this simple, keeping it short, we're looking to see what's going to happen. So this would be an entry, all right? And I've been doing this on my weekly move updates, right, on the other playlist, the tech dives. So it could also do this where it bounces, right, and goes back and forth between this pocket because this is a significant area for it. Or it could bounce up, come up here, go through, bounce, boom, right? And it could stop here. Let's just do it right there because that's the next high that was there. All right, so it's going to go back to another high and try to pass a high or get reversed and bounce off of the high. Same thing with the low. It's going to go back to the low or get reversed and back, bounce off of the low and go back higher. So right now, though, what have we been seeing consistently? We've been seeing lower lows and lower highs. Let's do this. And I've been marking this up in our Tech Dives not course, but playlist. I'm doing this because this is how you remember when you draw on these charts, it doesn't go away. So if you do it and make it and keep it simple, it'll be there when you return, and you'll automatically mentally know where you're at. You won't be like, oh my God, where you're at, because that's what a lot of retail traders that trade below this daily and under, they get confused about where they're at in the markets, and that's why they take L's. I'm forcing you guys to not be confused by making you look at the bigger picture and stay with the bigger picture, and also do things like this so that when your mind goes back to the charts, like I said, automatically you recognize everything. You recognize where you're at. You recognize what's going on quickly because you've already done all the hard work up front, right? So the more you do this, the simpler it'll get, the easier it will be to identify, but also the more your mind will get accustomed and the less tricks the market will play on you. Why? Because you already knew what was going to happen before. You were waiting for it to happen versus and planning for it to happen versus getting surprised by it. You don't want surprised by it. You don't want to get surprised by the market. You want to surprise the markets with your knowledge. You don't want to get surprised by it. So we've got lower lows too. All right. Remember, we talked about in the other video, we talked about what a trend was. It was either higher highs and higher lows or lower highs and lower lows, right? Lower highs and lower lows downtrend, higher highs and higher lows uptrend. Simple, right? What we want to do is be able to identify that nice and cleanly and simply. These circles that I made are going to help y'all do that because you can easily see visually, oh, I know when that circle, when it gets below that circle, that means it's continuing the downtrend. When it gets above this circle, that means it's continuing the uptrend. This is also one here too. Let me put this higher. So we have this. When it gets above this circle, it should be continuing the uptrend, right? We're gonna keep it simple like that, so that when we look at the charts, when we come back to the charts, it's simple. You see what we're waiting for. I mean, look at this here. These levels, these are alerts. Remember, I told you alerts. I'm practicing what I preach, y'all. I'm putting these alerts here so that whether when the market bings it, I know, oh, okay, that's my time to jump in the market. I don't have to be on the charts all day. Do I mark up the charts and look at the charts every single day? Yes, because I just love trading. You know, I love marking up the charts. Like, this is my art. This is my Picasso, as I told y'all. However, not everybody has a schedule, and I'm doing this way so that you don't have to do it. Some of y'all might be working a 9 to 5 and trying to get out the struggle. You can absolutely trade this way so that way you don't have to do that. You can literally start the beginning of your week, get in a trade, wait to the end of the week, see how things went, right? You can trade on a weekly, monthly, daily basis or a 12-hour basis. Maybe you want to take your lunch shift, you know what I'm saying? And follow along with what's going on here. As long as y'all staying in tune to the big picture, I will allow the 12-hour. Anything lower than that, don't play with it. But as long as y'all staying attuned to the big picture, y'all gonna know where y'all at in the markets, and that's why I'm doing these videos, so that when you come to the charts, you know where you're at. And You may not know exactly what to do, but just follow along with what I'm doing. Follow on what I'm showing you. Rewatch these videos over and over again and get this ingrained into your brain. It is not hard to trade. It is actually very, very simple. Where it gets complicated and hard is up here. And so that's why I'm showing you guys these tricks of the trade, these things that I use, so that I can quickly show you how I identify the charts and how you need to get into it. So with that being said, we've talked about how do we set it up. I've done a recap for you. Now it's about how do you get into the trade. I mean, this is how you get into the trade, right? This is how you get into the trade. But you're wondering, right? How do you actually enter a trade? Obviously, you either click the buy or sell when you get into it, right? But that's not what we're talking about. We're talking about what are you looking for to enter the trade. Remember, I taught you guys that the wicks are usually where you're going to see the market start to change direction, right? So if that's where the market's changing direction, that's where I want to look to trade. I want to look for or look at my signal would be those wicks, right? And you're going to see going forward those lower highs and lower lows, 9 times out of 10, they've got that wick there to identify that, hey, I was going the other way or I'm planning on going the other way. Show y'all what I mean. Look at it here. There's a wick. This one initially happened, right? So once you see a peak like this, well, wick just kind of bounce up. You create a little level there, right? Make it simple. What happened from there? The back and forth, right? Back and forth. It faked out. It went back up. The market starts bouncing off of here again. Ooh, bouncing off here again. And finally, it's dropping lower. How do you take that trade? Because that's what you're wondering. Obviously, I would enter off of what I call a failure. That's what the wicks mean. When I see the wick, when I see a level being created and then another candle bounce off of that, I consider that a failure. Guys, really, really, really quick, because I made this video and I realized how tired I was earlier because I totally missed this and I should have given this to you earlier. This trade right here, and mind you, you're going to have to skip through this because it's in the middle of the video, but I needed to insert it so y'all know how to take this trade, right? This trade right here, I felt like I should have explained that a little bit better because the reason why I entered off of this trade was because of the previous zone that I had here. So, boom. And that's why I go back and forth, because sometimes you just miss stuff. If you're, especially when you're tired, having the right mental state is good for trading. It's really, really, really good because you can miss stuff that's obvious to you that you would normally do that you just didn't do because of whatever reason, right? I'm teaching y'all, so I'm like in different points and stages of my mind at that the time. I was really, really tired earlier. But an entry like this, to get this entry right here, what we had is a break of this level. So it broke this low right here, right? Went all the way down to this box right here, this territory, then came back up and bounced back off of that low. That's how I knew the downtrend was continuing, and I felt like I needed to explain that to y'all. So I'm gonna go back into the video, back where we were. This is where it gets a little tricky, right, on a day like that, because I'm trying to teach y'all when it's not going to be as clear, so that way y'all can make the right moves, right? Boom. I'm going to give y'all another one, too. Now, this one is simpler to identify, right, because the wick came up, it peaked, you made a level there, and you're like, okay, I know that I'm in a downtrend because of creating lower highs and lower lows, right? We're getting lower and lower and lower. I know that I'm going to look for a reversal off of the top. Means I'm going to look for a wick to bounce off the top and a closure candle. What do I mean by a closure candle? Means basically it's going to be the other color. That candle is going to make a wick and it's going to close in the other color. That's just to keep it simple. So this was white buying candle. This closed as a selling candle and it bounced off the top. This is a good entry. What is your risk to reward on this? So we're gonna go to, I gotta find this tool because I don't really use them as much, but y'all should. So if you took the trade here, right, took your sell here, you should typically, if you're taking a trade like this, you should typically be up here, right? That's where your stop loss should be, over here. You're gonna see that's 3%, whatever, that's 18,000 points. Where would your take profit be? It should be at this zone right here. Why? Because that's where your next low was, right? If it's making lower lows, we want to go to the next low. Now, if you're not that bold and you're not that brave, right, you can go to this low because the market had a low right here. I'm gonna draw it for y'all. So if the market made a low right here, and you know that we're now in a downturn, we're getting lower lows, right? Lower highs at least, because this low is higher than this low. So that's why I say it could get confusing, but just follow along with me. This low is higher than this low. However, this high stop and then this high stop. So now you know you're in a good territory, right? And overall, Look at all this movement from before, right? This signals a very strong downtrend seller movement. So we know we should be looking at taking sells from that point on, right? Now, this high was lower than this high. And then this high is lower than this high. So you know you're getting into that downtrend. Once you identify the trend, then you know where you're trading. So then you only take sells in a downtrend. Simple. You only take sells in a downtrend. Now you're going to take it to the next low. Why? Because that might be the next point that it bounces off from again, right? The market is consistently bouncing off of highs and lows and highs and lows and highs and lows and highs and lows. It bounces off it consistently because it's a fight for territory. So if I'm waiting for the market to get to a low, that's going to be the ideal point to get out. And as you can see, this is a risk reward of 1. It's basically a 1.2, right? So not a bad trade. At 20,000 points, you're risking 18,000 to get 20,000. However, the bigger move would have been this next low that it was there, right? Boom. And I told y'all, and I don't remember what video, so I'm going to just go over it again. When you're taking a sell, you're taking this trade and you're here. Once the market gets here to this low, you can either A, get out and close your trade and take your profit, that 1-to-1, that 20,000 points, or you can B, take your stop loss, move it to break even. That means you're not risking anything at this point, and now you can push here. If the trade was to go against you, boom, it just knocks you're neutral on the trade, right? But you push for that bigger move. You can do that. It's all about how you want to trade. As long as you're trading with proper risk management, that does not matter. Or you can do this still, right? Do that same thing, take out only half of your trade, right? So you take out 50% of your trade and you let the rest of it ride until you get to this next low, right? That would have been your next point where you're looking to get out. Now, some people are more bold and they're like, well, I want to keep pushing in the downtrend because I know they're in a downtrend. And then they'll take it all the way to their next lower zone, right? Which is fine too, you know? So look, some people are over here and they could even still be in this trade. But that is right here it says it. Risk to reward ratio, 71,000. There's no 1.1 because you already made your trade. You already took some profit. You're already neutral. You're not risking anything. So you only stand to gain. So you made 71,000 points on that move. Now, you can get out. You can mix and match it. I'm not gonna go over the technicalities of how you can get in the trade, right? You can customize trading however you want. I'm just showing y'all where to get in, how to get in, and then how to measure that trade along the way. Dang, this video is gonna be longer than I thought, but it's good information, so I wanted y'all to keep it. Now, going back to this, right? Because this was a simpler one. This one you already knew you had a lower high here, lower high here, and lower high here. So that was your third lower high. You're like, I'm taking this trade. That's great. Now, even this trade, remember, this was your previous high. The market was peaking, right? You made a new high here. Let's say you don't have any of this yet. If you want to wait, you wait. You know, I guess to make it simple, you don't need to force a trade. You don't need to take this trade if you're feeling uncomfortable. So what I'm going to say about this move, because we're back to this move right here, right? How do you get into this trade? Well, again, you wait for your candles and you get in. You always get in on the candle that's going in your direction. Now, the difference between this trade and this trade is not as risky as this trade. Because technically, whenever you take a sell, as I showed you guys, you should be so your next low should be your take profit point, and your previous high should be the point where you're putting your stop loss. The difference with this trade and this trade is your stop loss is going to be a lot more open. So let's just say as soon as it bounced off of this level right here, this failure, you took it here, right? Technically, I'm gonna move that one. I'm gonna move this right here. Boom. So this is the difference between trade 2 and trade 1. This is where your stop loss should be. Now, you should always be doing a 1-to-1. So let's scoot this down. What would a 1-to-1 be? It would put you right here, right? That's how your trade looks. So the only difference is you're taking a smaller lot size on that trade because you're risking more. That's the only difference. And I know you're going to be like, well, dang, that's a large stop loss. That puts you in the best position to win the trade and also mentally know that, hey, I'm risking a lot more on this move, but I'm feeling really confident about this move. That's when you take trades like that. If you don't feel confident, you wait for the next entry, which came very quickly, but you had to wait a few days, maybe a week or two, right? Let me see. When is this? This day. So let's say you got it on the 16th of April and you had to wait till May 13th. That's 30 days. You know what I'm saying? So to each his own. Figure out however you want to trade in your style of trading. All I'm doing is showing you guys how to find entries and how to properly take those entries. So once you get in, you take that sell, you make sure that you're putting your stop loss all the way back here. Because if you didn't, let's say you didn't put your stop loss here and you put a really tight one, you would have got knocked out. That's all. You know what I'm saying? You would have lost 8,000 points. So I would much rather see you guys win trades, which I said take a smaller lot size and take something where you can risk 45,000 points. You know what I'm saying? If you're on a smaller account, 45,000 points would be probably 4,500 on a .10 lot. So yeah, you just trade smarter. You know what I'm saying? It's all about how you want what you want to do on these charts. I'm showing you guys how to execute it. You determine how you want to trade. You determine what move looks better to you. You determine what you want to risk. Everybody has a different risk to reward appetite. You know what I mean? I just want to show you guys how you take that trade once you identify where you're at. Um, Obviously this is the better trade all day. That's obvious. But sometimes, as you've seen, you have to wait for that setup. Not everybody's patient. Some people need to make money, right? So if you need to get in, I mean, look at that. It's still you had this trade. You still were down. Like, you still got 26,000 points. That's no sneeze in the park. You know what I'm saying? That's $2,600 on a .10 lot. You know what I'm saying? That's a very small lot size. So, which if you're trading a $10,000 account, .10 lots are pretty standard. It's pretty good risk to reward. You can risk on this trade. You know. So, long story short, this is about your goals and how you want to trade and how you mix and match it how you want to. Let me keep it simple. I'm sorry, I'm a little tired today. But the point is, you now know what you're looking for to take the trade. You now know that when you're in a downtrend, that's what you're looking for to execute. You want to execute off a previous level that you bounced off from. Or you could wait, for the next. So you don't have to take this trade. You could wait for the next level, right? Or you could wait for one of these lows to get broken, right? So if I do this, this is another way you can take that. Because I always do too, right? So instead of taking this sell right here that might have felt too risky for you, you can take this little quick one. As soon as it breaks this level, you can get in for a little bit. Now, did it eventually go back up? Yes, because it's a shorter trade. You're not getting all of this. However, was it less risky? Yeah, because instead of taking it from here, you took it from here. Now you're here. So now you're risking only 26,000 points. You know what I mean? To get here. Now you're gonna have some drawdown on this, as you saw. You know what I mean? But if you're trading the right way, drawdown does not matter. That's the whole point of this. If you're trading how you probably need to be trading, using the right lot size, you're gonna get in these trades and win these trades all day. And you're probably more apt to hold it the whole time too once you start getting there. So, long story short, this is how you take your entries, bro. This is how you find your entries in the charts. You're looking for what trend you're in first, right? So identifying higher highs and higher lows, or lower lows and lower highs, and that determines where you're trading, what direction you're trading in. Then you're really waiting for your moves. Then when you get your moves, you're waiting for them to look like this. It's that simple. You're waiting for them to look like. So this is another one. What this did, and I had this before, but I was waiting. So once we were here, I said the market's gonna go below this low and do this and then go down. Oh shoot. I hate when I do that. I'm sorry. Boom. Boom, boom, boom. And that's exactly what happened. Now, the market actually went further, so that was a good sell too. But regardless, this is a good position. As soon as it crossed over under this level, this was a previous low. Once you've seen how strong this came down below the zone, because remember, it's about volume too, right? So if you see a lot of volume in your direction, you know that's a pretty good sell. The sellers are taking over. They pushed through this previous level very strongly. So when you get in your trade right here, I'm gonna just put it here again. Getting your trade right here. These are your highs right here, right? You're just gonna put it right above. So now you're risking 26,000, and you're gonna put it right to the bottom, the top of this zone right here, right? That's still that same pocket that we're still in now, which is crazy. But that's 32,000. So your risk reward ratio is 1.21. This is what you're looking for. This is how you take the simple trade. You could get in here. You could take the move. You could have got out as soon as it hits here. Remember what I tell you about the wicks. The wicks are the spots where y'all want to look to execute and get out of. So once the market got here, you could have literally just put your take profit here and only took 0.86. You know what I'm saying? I like to go for 1-to-1s at least, but hey, some of you might not be that risk tolerant, and so you might have got out. You know, it's to each his own. And you could have even protected your trade, but then you would have been stopped out. So it's about customizing how you want to based off of your risk. You know what I mean? If you want to take risk, which you should be taking risks. You should be willing to take risks when you jump on these charts. If you're not willing to take risks, like I said before in the previous video, don't even trade. This is a risk-taking game. So, but that's a perfect entry. So that's a good entry once it crosses the previous level. As you've seen, the wicks were trying, then boom, hard. That movement comes down. The sellers just jump in there. They locked in. Good sell from here to here. That's a good sell from here to here. Then the market did the move where it bounced up. So it came below. It bounced off of the top. Again, failed this same level. That same level. And now goes back down. Right? So we first had this one here. Where this one. So actually, there's two moves here. So let me go here. So the market just went from here to here. That's two trades right there. So that's one trade. That's two trades. And what am I trading off of? What am I looking for exactly to enter? This is probably what y'all really wanted to hear. What am I looking for exactly to enter? You're either looking for it to break that solid movement and take that trade there with the knowledge that it's a little bit more risky than waiting for your bounce, right? For the market to come back and bounce off the level and then execute here and then boom. So if I executed here, I could choose. I could keep this as my stop loss, or I could have a tighter stop loss because I feel more confident in this movement because this trend has now continued, right? And so now that's a much tighter trade. We're only risking 13,000 to get to, well, shoot, 25,000. So yeah, that's how you're going to look for the trades. That's what you're exactly going to look for in order to take your trading opportunities, in order to execute on the charts. That's what this was about. I wanted to give y'all a recap of everything because I haven't taught you in a while, and I wanted to show you how to execute. So that is how you execute. That's what you're looking for. You're looking for areas where the market has created peaks, or I'm sorry, this is a peak, and this is a low, right? A valley, whatever you want to call it. Waiting for the market to peak high or peak low. Oh no, you see what we're looking for. That's why it's circled. Then I'm gonna delete that. That's what you're looking for over and over again. So it did it here. You got that opportunity. Even here, look, and you should not be taking this. Remember, because if you're in a downtrend, what are you doing? Boom. The market peaked here, came back down, bounced up. You're not taking this. You're just waiting for the next opportunity, your next lower high, right? It's because we're in a downtrend. We're making lower highs. We're only trading down. We're only trading sells on a downtrend, right? So going back and forth, you're going to see the market do that a lot, and you're going to need to zoom out and simplify it. And man, I've said a lot this video. I don't want to do too much to jumble y'all brains, so please go back and rewatch this video. I actually hope I shared what I wanted to, which is really just to show y'all how to enter a trade, show y'all what y'all looking for to enter a trade. You're looking for and waiting for it to bounce off your levels and your zones, and then you're getting in. That's the simplest way to put it. Now you want to make sure you're in the right direction. So taking sells, bouncing off the top and going down, or going lower and taking those sells. So you're either taking a sell opportunity like this to where you made a top and it's bouncing like that too. That's still the same thing. Not here because we don't want to take buys. Even here is still choppy when it got below. As you guys seen, this wasn't as significant of a low, but it kept making lower lows. They tried to trick people out of this move. That's what really happened, right? So there's a lot of finesse here, but we knew we were in the downtrend because we were paying attention to the fact that we had lower highs, and now we're still getting lower lows, and I'm going to identify that as well. Pay attention to that, guys. It'll save you to see where your lower lows and lower highs are, or higher highs and higher lows, because it'll tell you, even in the midst of this confusion, it'll tell you what trend you're really in. While they're trying to trick you out of the downtrend here because they don't want you to get this move. That's how the banks are. They want to get this move. They don't want you to get this move. They're tricking all the retail traders out. You're paying attention to, and it's not smooth, but I'm still getting lower lows, right? I'm not even getting real highs here. I'm just getting lower lows. And then boom, this low gets broken very significantly and then we drop. That's what you want to pay attention to. The trend you're in, where your lower lows and lower highs are, or your higher highs and higher lows, and getting into what looks like an execution to you, right? These are executions. They're bouncing off multiple wicks, failing the top in a downtrend is a good signal to enter the charts. Same with an uptrend. Multiple wicks. You've got a strong volume that just goes right through the movement, or you got multiple wicks bouncing off the bottom, signaling we're going higher, right? Boom, strong movement. This is a perfect entry right here. We had the strong movement, boom, boom, retrace, straight to the top. This is a perfect entry right here. That's what you really want to see. Now, I know you're like, well, how is it a perfect entry if the candle didn't look like this? The point is, it followed the move perfectly, right? These are the moves that I've been drawing. These moves, that's what I'm looking for. I'm looking for the market to come up, stop up here, bounce off here, lock in here, and then take the move. Same thing out here. We're in a downtrend. I'm looking for it to come lower, stop over here, bounce over here, drop. And I'm trying to get on this drop. I'm trying to get on this bounce. I'm trying to get in right here. I can get in right here as soon as it jumps and goes above it, but this is the better trade. And as you guys see over and over again, it'll probably help to show y'all this. That's what the market is doing. Strong volume. This one didn't give you a real drop or a real bounce, right? Because I like to take it off the level. But overall, it followed the blueprint, right? This is the blueprint. These little drawings I do, those are the blueprints that you'll want to follow. As long as you're in that blueprint, you can customize the trade how you want. You can be as risky as you want as long as you're following the blueprint. Because if you did take this trade, this is where your low was, and that's how much you're risking, but look how much you're looking to gain. And this wasn't here before, so you'd have just been holding the trade. You know what I'm saying? holding the trade. Boom. 84,000. You were risking 22,000 to gain overall up to 84,000. Like, that is a crazy day in the markets. Now, I'm gonna show y'all one last thing, which is how you trail. Because when you're making newer highs or newer lows that haven't been there before, right? And you don't have much data to go off of like this is all new territory for gold. Because this was 2025. So this was all new territory. So once it broke, what you're gonna do, you just got to keep making these highs along. Once you see the market trying to play games, which is bounce off the top, you just make a new level and you trail it. We call that trailing, right? You trail your trade. So if you're in here, you're trailing. Every time you see a peak and you see the candle end like that, boom. Now, also realize, and I talked about this in other videos, but once the charts break a significant zone that they've failed to break before, don't exit that trade. How do I put this? One, don't take it lightly because it took a while to happen. But when it does happen, don't just get out just because you're afraid. Don't be afraid, bro. That this is, like I said, this is not for the faint of heart. Don't be afraid. If you're in it, just trail your trade to the top. Trail your trade. Every time you see these peaks, just keep on trailing it. This is when you know you get out. When you start seeing volume, right? But if the volumes in your direction, keep moving, bro, and trail your trade. As you go up, remember, if you started down here, as you're going up, your stop loss should be down here. So if you're up here, your stop loss should be here now. You're up here, your stop loss should be here now. So you're positive and you're protecting your trades. Anyway, I'm not going to get into too much. I know I went in a lot in this video. Please rewatch it. I just wanted to show you guys overall how I like to take my entries, what I'm looking for. And it might not make sense to y'all right away. I don't expect it to. Please watch it over and over again. That's the point of these videos. Watch them over and over again until you get it, until you get the information. Because I'm giving y'all the sauce. I'm giving y'all all y'all need to get into the charts. But keeping it simple. Once again, this is my last refresher for the night, for the day, before I get off. You're gonna make these moves, and then you're gonna wait for these moves, and then when you see these moves, you enter. It's that simple. Keep it simple. Just look for an entry candle, something that looks like this, or wicks, you know what I'm saying? Those are your signals to start looking to enter. But you want to focus on drawing your moves and waiting for your moves. Because the market only does one or two things at its own. It only bounces off of the top, bounces off of the bottom, or plays in the middle. That's simple. So thank you guys again for tuning in to Maverick's Point of View. We have gone over executions very in depth because I wanted to give y'all all the sauce. Go back and rewatch this video as many times as you need to, but the sauce is there. I've been giving y'all exactly what y'all need to enter charts, to know where you're at in the markets all the time, to draw and set up your moves so that when you get to the chart, you know exactly what to look for and you don't miss your opportunity to make your bag. So thank you guys again for tuning in. This is Big Maverick's Point of View, and I am out, y'all. Peace.